This is Alex with the StockMatrix program. This is my first official update on the program. Again, we did it for about 6 months, a little trial and error as I set it up on my spreadsheets and whatnot. We waited till January 6th, which is the time period that we use. Let me get off of this for a second and go to the this is the program. Of course, I keep track of this on X, CBOTMAN33 is my handle, which I'll do the day-to-day, if anything comes up that isn't really requiring a video. Easy, and again, just for clarity for future references, and of course for this one, I kind of keep track of the actual price, meaning with all the splits that it had, as an example, NVIDIA should be at 71,000. Well, it's currently trading at $149. So again, it's a manipulated price in my opinion, because most people wouldn't afford to buy even one share at 71,000, right? So again, they manipulate the value to add more shares, and of course hook more people in, and the profits and losses are larger, right? So, and that's what this column is right here, historical volatility. And this is kind of my thing, right? This is a GAN thing, a WD GAN. The upcoming annuals, I go back as far as I can go and keep track of all the annuals. So again, I've got them all in a different pages and whatnot. But anyway, that's the annuals, and we do have quite a bit, which makes sense, logical sense. The first part of the year that we'll have some type of big change of trend event. And then of course, this is from the highs and the lows. And again, I kind of mark, again, 45 is a pretty important GAN thing, as well as 90, 180, 120, so on and so forth. So that's what these will be marked when you see them in the future. We have one that's a few days late and one that'll be coming in a couple days. So I went ahead and marked that. And this down here is your solar eclipse, which again, I'm a big believer in. GAN used to always forecast his markets basis the solar eclipse. 90 degrees was all his forecasts basically for the big pile of movers that he forecasted in stocks and commodities. So anyway, this is the again, I keep track of this, and this is the timing that I use. So before I go into the actual charts, here is and I won't go do this. I'm just doing this the first few times. Hopefully I won't do it again, and I can make this a little quicker. But I want everybody to know how it's set up, right? Everything's based on 100 shares on the actual program, the StockMatrix program. Now we're doing the options, so really this has nothing to do with it, but except for to tell me if I need to be long or short, right? Buying a call or buying a put. Again, when you buy a $100 call, you have to sell a $100 call. When you buy a $100 put, what do you got to do? Sell a $100 put. Pretty basic stuff. We're going to keep it very simple. It's all kind of everything's set in stone, right? I do the same thing. It's repetitive. It's like a McDonald's. Everything's the same. It's all repetitive. That's why they're successful, and that's why you treat this like a business, and it also keeps the guesswork out of it. So anyway, you can see that really again, I had to kind of add, since it's the first trade, right? I had to put all the calls and puts on in the trade sheet, which I'll show you here in a second. But these were the actual ones that actually made a move, which changed trends that, if I didn't start on the 6th and I started 2 weeks ago, these are two of them that did go long. But as you look through here, we got two longs, short, a long, a short, a long, long, long. But you have quite a few shorts in here. So again, we've got basically 11 long-term downtrends and 11 short-term trends, and then we got only 6 up, right? So again, it's definitely tilted to the downside. Um, and you can see this, I don't normally post this on the X, so since you can see it here, I'm going to explain it. This is the index, right, which is the total of all these 17 stocks. So I keep track of them. I don't do it every day, right? I just do it when I'm in here and updating it or whatever. So again, you can see that we're off the highs quite a bit. And again, I don't know the exact high, but this is close enough. Looks like around December 7th, we're 471. So, and you can see that we got down to 413 back in October, 412, 410, November 5th. So again, I'll keep track of these. Won't really post them on X, but at least you can kind of see them. Also want to mention that if you're like what you hear here, this is free. And if you'd like to buy me a cup of coffee, I would appreciate it. This is all free. Only donations only. I have no sponsors. Don't really care to. I want to keep it how I want to keep it. Let's move into the charts themselves. Here's NVIDIA. And again, this is one that went long. I kind of kept the mark here where the stop was, right? Again, how I do it is 3. So just because it had an X here didn't mean I went long, right? I had to make sure I had at least 3 of them. Kind of a point and figure setup, right? So the downtrend is definitely was intact, and then it changed. But we do have a true double top here on this bullish, right? We did have some timing, and we'll review all that in just a second. But again, it didn't quite make a new high here, but it did make a double top on my chart, which again doesn't mean anything. You don't want to guess, right? You let the trend determine where you're going to go. So anyway, I did buy it with a stop here at 126.80. Let's go to Meta. Just a jibbery jab. It's still long. Again, we bought it up here where, again, it was long from December 3rd prior to. Now, I'll change these dates after this update. I wanted to make sure you kind of knew where I was actually long from or short from. Since, again, I had to put everything up to the 6th of January. So this is Coca-Cola. It had a nice high and a nice bear decline. Pretty simple trade, right? Nothing too complicated. We are 270 degrees, right? Using the Gann thing. 360, 720, so on and so forth. And this is the 1-to-1, 1 box over, 1 box down, right? 1 quarter moon over and 1 square of 9 down. So again, I do moons and square of 9, kind of a Gann thing as well. So anyway, we did have something coming in here. So we'll see. We'll look at the other chart here in just a second. Google. When I did my update, I actually used the GOOGL. So I don't know if I'm going to change the actual charting. Anyway, not the big deal, but their options were better priced, so I did that one. And actually, the history of the charts I did on the stuff came from GOOGL symbol. Anyway, no big deal. This is where the stop is. Kind of had an outside moon period. So it'll be interesting to see if we continue up or we fail here. Again, the stops, at least it came up, right? Again, it's been long since November 21st. So it has a decent profit in it. Now, again, I'll be changing that to January 6th along with all the other ones here after I'm done with this today. Here is Microsoft. You can see it's still in a bear decline. The stop is up here. Of course, it got, let me see, 1, 2, 3. So it got short here, right? Which was 420.89. Yeah, that's what I got up here, 420.89. So again, it's still got a loss built in, which again, if it's a chopperoonie, that happens quite a bit, right? You got a big lead if you don't take your profit, which again, I won't because I'm following a systematic approach. Now, for people that don't have quite the real money to be trading some of these, and you're trading less time, then that's a different situation. Here's Amazon. Again, it's been long since September 11th. So again, I'm buying these calls that I got now at a pretty high premium. So it looks worse than it actually would have been. Um, April. Apple is close to getting stopped out. So, and there's another way to trade this for the latecomers is you can buy it when it gets close to the stop, um, and either don't worry about getting out of it, right? If it goes through the stop, you just hang on to the call because it'll probably be worth a couple $100 of time if you buy the call, and you can play it that way, right? So again, there's other ways to trade it than just what I'm doing, but I'm doing it systematic. I truly believe in keeping everything a system. You're never wrong. The system's always wrong. If you have a series of losses, it's not your fault. It's the damn system's fault, right? It's a mental thing, but it's also keeps you from guessing. And the trend your friend mentality is pretty key in this business. Um, yeah, this got stopped out. This is a Tesla trade that got stopped out actually on the 2nd. So it's actually short here, which again, it did have a higher close. So that's a beneficial one for our January 6th time zone than actually doing it on the 3rd. So maybe it'll even out. This is Lynn, kind of a hydrogen play, I guess, but it's been around a while. Again, most of these I've got are, except for coin, have quite a bit of data, right, going back from the 80s, a lot of them. So, but this one had a big bull trend, broke trend with a gap, followed through, pretty simple trade. We're kind of, again, I like bear traps, right? So if I was needing to get out because I didn't quite have the money correctly, or maybe we're running out of time, right? Because it's been short since October. So maybe we're out, I would be taking it out here and getting out on new lows, and then either waiting for a couple moon periods and then reestablishing. That's kind of my mantra. ED, Edison, that's another like kind of a electricity company play. Again, bull market high, turned into a bear, almost made new lows, not quite. So another one that we'll be watching for a cleaner. Again, the stops are here, so pretty basic trend. Of course, we're short here on the, officially now on the 6th, so with stops there, so it'd be a loss instead of a profit. Adobe, a very ugly chart, man, and these gaps are not uncommon. If I'd have known that, I probably wouldn't have picked this one, but there's just a gap in units, so the option plays are definitely advantageous based on how it trades. I don't know if their spreadsheets are broken and they can't understand their quarterlies. I mean, I don't understand how it can gap so much. So something's fishy there. But again, another new low, not really friendly. But if you're just trading it, right, you might be tempted to take profits. I wouldn't probably sell it down there or buy it down there, but I definitely maybe, especially if you have multiple options on, you might get out of one or two, right, depending what you got on. IBM, another one that had a bull trap, which again I'm pretty keen on for the traders. But the stops are here. We're back to the solar clips again. That's what this dotted line is. I like the solar clips. There's a whole, and I'll kind of piece together a little bit why I like them throughout this next year as I go through these data. Bank of Magellan, a bank play, kind of had a bull trend, and once again it kind of stopped and started going down. The solar eclipse closes down here 1-to-1, so this is kind of the average area that my guess it'll break back to if it's going to continue its minor correction here. Procter and Gamble, again, bull trap once again. Got everybody all fired up. We're going to the moon, Alice, and then kaboom. That one looks weak to me. These lows look pretty suspect, like we could maybe drop it down in here. Again, that's a guess. Again, the system don't care, right? Here's JPM. Logically, I'm bearish as heck, but the chart is not. So there again, I would have been wrong trading JPM on a bearish mentality. But again, if you know, following the trend of some of those other markets, it's very possible that we could, you know, if the trend ever rolls over, it's going to have a pretty serious decline. Coin, of course, Coinbase and the Bitcoin and whatnot have been pretty. This track's pretty good. I don't like trading this stuff that doesn't have a lot of time. It only has like 5-6 years worth of data, so I don't like that. But not much I can do. All of that stuff's fairly new. I don't even want to. I wanted to trade something that was in that genre that actually made sense. This one does. It's active. It makes money. I was, you know, made a pretty good lick on the trade there on the options when we were testing it. Cintas, a very old company back in the 80s. Again, a NASDAQ traded company that seems a little suspicious to me. I mean, I know it's a good company, but to be up here, I mean, you know, that ain't, it just had another split and then boom. Again, the bait and switch dropped 20% in a couple weeks. So that one's sitting there where it's at. Let's go to the actual trades that I put on. Again, this is the option trades. Let's see if you make sure we. Oh no, I want to. Oh, I already did that one. Sorry. Let me. Okay. This is. These are all. I took me a few minutes is all today because it's pretty simple. I just took the closes of the 6th. You know, if it was long, I went in and bought a call, and if it was short, I bought a put. At again, I always do one. Let's do an actual trade so you kind of get an idea. The video, let's do that one. That was the most current one. I already got it in here. I won't add it, but this is bar chart. I like bar chart. It's got good stuff. It's free, and if you want even their top rated stuff, you can pay for their service, which is highly recommended. And then we know that we're doing the options, so that's all I'm going to show you. And I always go, again, I do the same thing every time. I want to go at least 90 days out, so that'll be the April contract. It gives me 101. So the March I don't think gives me enough. Yeah, it only gives me 74. So I'm doing the April options, which cost more. But again, if you get in a winning trade, you don't have to roll. It costs you money, right? So now, if you really got a big bank and you're trading this $150,000 system, you know, you might go in, maybe do a year out, right? If you can get them done. So, because again, your losses are equal, but less, right? But your profits are bigger and the same. So you just that you miss out. You don't have to roll and dick with it all the time. Now you have more risk because you're buying better options. You know, if a 9/11 incident occurs and everything will go south. So anyway, this is the video, right? It's one trade. We bought calls, so it's at 149.43. I bought 145 calls. Again, 1 or 2 strikes in the money. If it's right at the money, I go the next one down. If it's got several dollars in it, I'll usually use the in the money one, the closest one. And then that's it. Very simple. Now again, here is the LASK, the 1921. Here's the bid, a 1915 on this call. Again, when you buy a call, you control 100 shares, right? So that's, instead of 15 grand worth of stocks that you'd have to dish out, you can do it for 1,900 bucks. So pretty key there. But anyway, and sometimes I use the midpoint, right? If the bid and offer gets a little wide, I'll just take the midpoint, stick it in. Now I don't wait too long. I give it 2-3 hours, and then I get more aggressive and push it closer to the ask. Again, we're buying them, so the offer is what your target is. If you're selling them, let's say you're getting out of the trade, the bid is your target. But yeah, that's all I do. It's pretty simple stuff. And then, of course, on this program, I add to the portfolio, which is the one that we just showed you. Yeah, so then it adds to it. But that's our. Let me get back to portfolio. Yeah, here is again our portfolio. So this is what we'll base everything off. If trends change tomorrow, which some of them could, we'll take them and reverse them, take the loss, take the like I said, this getting in is always a little tricky when you're, normally wouldn't do it this way, but again, I got to keep it systematic, right? So I'm willing to take a loss just to have it a systematic approach, not guessing. Because I could wait. Oh, I'll wait for a break. Well, if I don't have a break and you didn't buy the damn thing, you won't be in. Could be a 20 grand move and you're waiting. So you never know. I just do it. Gotta have money though. I set this up at 150 grand. It cost me, which again I just made up, right? That's fictitious. I do trade these personally, but not all of them. And I do the system, so I do exactly what I'm doing here. Sometimes I might do less of a time frame because I can't afford it. But anyway, that's that. Now let me do a quick little deal. We're about 25 minutes in here. I want to go through the charts on the daily, which again, those other ones are my system charts that I manually plot. Of course, these are not, but these also have the annuals in there. And again, I post, I keep these, it's a GAN thing, but I truly believe in it, as you can see. So on these charts, what you see is here's the solar eclipse, right, marked pretty legibly. And this is, I take the solar to some important point, and it projects, basically doubling that move. I just do that for points of trade. Here's one, and that one is kind of a nothing. This one was that, and that was a low. So again, I just know from my past experience that it can move the market. Now, also take these. These are like the ADC, right? The 1, 2, 3. But I take the low. This one will be a low. Here's your pivot, and then your secondary low, right? Primary, 1, 2, 3. So this one was, whatever, how many days long? 23 days. And one cycle, basically, of 23 brings it out to April 10th. And so when you see those black ones, that's what I'm doing. There's April 12th. And again, that was a high. And there's December 16th, that was a low. And again, I do that for my own personal uh, stuff, but also it's good to know if you're trading it and doing the opposite of what I'm doing. I also keep track of the opens of when the first trade was, at least on the data I have. But again, here's all your annuals plotted as well. So again, you can see that it tends to work. Uh, Now again, when like say this annual gets taken out, right? And I could have spun it the other way and called it a low, but you didn't know this was a low until after the fact. Well, it had a big day, which you want to see through this price. So anyway, you can kind of go through these. Now I'm going to move on because I'm wasting time here. And these are this is Meta. The symbols right up here, Coke. And you can pause it, I guess. There's Google. Now Google from the solar sequence has one coming up the 9th, and then probably more importantly it will be the 15th. But then if it matches up with one of these annulars, it makes me a little more excited. Microsoft, and here I got them on both sides of this one because I don't know if it's a high or low yet, right? So that's when you see that, that's how it's coming in. Now the 9th is an annular 1996 low, which is again designated in red. We also have this sequencer from the high, so on the 9th. Amazon, kind of a flat. That doesn't look bearish to me. I know you're hearing a lot of news about these guys getting out of their positions. The Amazon owner, but I don't know how. So much fake news out there. I don't know if that's true or not. And they know how to trade, right? They know they might have got out of a bunch of shares but bought a shit ton of calls, right? They might have doubled up. You just don't know what they're trading for sure. Here is Apple. Definitely can see we have 3 annulars coming in. So, and it was a low, so it'll be interesting. Now, not confirmed, right? That's why I don't have it spun around yet. But this was definitely high up here, so it'll be interesting to see how the opening tomorrow, and if it makes a new low on Apple, I'm going to be a little bearish at Apple. Here is Tesla. Here's Lynn. Here's ED. Get another new low. Again, ED, Magellan, Lynn, they've been kind of alternative. They were kind of going up when the stock market was getting a little itchy and a little corrective. And now, it's kind of trading off. So they weren't going up based on their probably company merits. They were going up on protective trade from the big traders out there. Ugly ass gap in this Adobe. Again, that's not uncommon. Another one back here. You can just go back in time. Gap, 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 gap. I don't understand it. It's crooked something. I don't. But anyway, it has some time zones down here, so it'll be interesting to see how that trade ends up in a week. IBM, we're back to the open of when it started. And it has this zone in here today, which is again a 1, 2, 3 ABC. Let me see, it's the third one, so the third cycle of that, right? I guess you can call it that. There's the Magellan Bank of, here's Procter. Again, another safe play that got hammered. So everybody that was in those safe stocks are going, what the frick? Lost 20%. JP Morgan, again, my nemesis. Silver's kind of up there, so I get a little, when I see high silver, I get bearish. JP Morgan. For all you people out there that probably know the reason why, right? So, Gotta be careful what I say. I've been banned on YouTube so many times for saying stupid shit I didn't think was even bad. So I'm gonna be more neutral. Here's coin. Cintas. Again, a big gap down here. Not too small. And again, that's after the stock split. So it was trading at 500 and something. So that's a 20% drop, I believe. Let me see. I'll just come over to here. High to low is 20, almost 21. That's sizable. And a lot of it was on a gap, another gap. So definitely something has changed in that company. And you can see how big that gap is because you got one coming to the upside, but really you don't get those kind of gaps in Cintas because it's again a spreadsheet. You should know exactly what your quarterlies are, for Christ's sakes. All right, I think I'm going to sign off. This is the first one. It's a little lengthy. I'm going to try to keep it. I'll do a short or two. I've never done shorts, but I'm going to do a short or two in the actual trades, the new ones. Like it'll be, so you might not want to watch it if you've already seen this one, but it'll be just on the Tesla and the video. Have a great trading year.